Yo, what's good everyone? Welcome back to another episode here at the Inner Wealth channel. So today we're going to be diving into this trade setup. As you guys know, throughout 2023, 2024, I will be putting out lots of content, lots of trading ideas. I'll be actively sharing ideas throughout this channel and Twitter. And so the trade today is pretty advanced. If a lot of you may not understand it, but I highly encourage you, if there's anything on here on this trade that you did not understand, I highly encourage you to check out the other content and all the courses that I have displayed throughout this channel. Okay, there's a lot of content to cover. There's a lot of different trading styles that I've developed throughout my years of studies. And so if there is anything at all that you guys don't understand throughout this trade setup, I promise you will find it in the other videos, a lecture on it on the other videos. Okay, so if you guys check out Dow Jones here, there we go, that's a lot better. If you guys check out Dow Jones here on a weekly perspective, okay, you guys can see that as I've been mentioning, I'm pretty bearish on this. I've been wanting to see a lot lower price action. The reason that I am bearish is because mainly these liquidity sweeps, and if you toggle between this feed and our previous feed, US 30, you guys can see here Dow Jones on Wanda, the feed shows that after we took this liquidity, we did break structure right here. So to me, we've been in this whole trading range from this high to that low right there. Now we are in discount of this whole range. Not just that, but as you guys can see here on the futures market, we have already taken out that low. Okay, so I feel pretty strong about continuing down to this low and potentially even coming all the way down here to this insufficiencies. As I've mentioned, I'm pretty bearish on indices. Okay, here on a daily perspective, you guys can see that we have this whole expansion down, lower low, lower high, lower low, lower high, lower low. We have a bearish trend here towards the downside, adding on to that weekly confluence. You guys can see that we traded up into this insufficiency here. Okay, and then from that insufficiency or level of resistance, we moved down all the way to that low on a weekly perspective. Now for me, I like to look for areas of support that may take us to previous areas of resistance. If we're bearish, what you want to see is key areas of support pushing price action back to another level of resistance to continue moving to the downside. Okay, so a good example would be after we took out this low right here. Okay, we'll play a little bit of replay. Okay, after we took out this low right here, notice how price action, okay, notice how price action swept previous liquidity, came up for previous area of resistance to then come down to a previous area of support. Okay, now from this area of support, okay, we come into this order block, which acts as our new level of resistance. Now after we hit a new level of resistance, right, which is this order block, now we can look at more support, which is new daily lows and that weekly low that we've been eyeballing, right? So price action then falls, okay, falls into our previous areas of support, and now we can mark up our previous areas of resistance. So I know we were looking at this high. I'm looking at that high to stand. We have Asian liquidity here. Okay, Asian liquidity. We have our new daily low and a previous daily high. Okay, and we'll let this price action roll out all the way because I'm gonna jump out of replay. But you guys can see from that previous area of support, we have now moved into that previous area of resistance. right? And so now that we moved into that previous area of resistance, or when we were here this morning, I should say, we were looking at this whole push up, okay, this whole move to the upside. You see price action is bearish. Here's my whole range. From that sweep of liquidity to this sweep, okay? Why? Because that extremity right there came into a previous area of resistance to make a new area of support, okay? So we have price action walking up, higher high, higher low, higher high, higher low, higher high, higher low to a new higher high. When we were here this morning, okay, we were looking at this imbalance here, very slight. We were looking for potential reaccumulations, okay? And so as you can see here, when I only trade after the open at 9:30. Okay, and you guys can see here we create this higher high, right? Higher high right here. So this is our current range from this low to the high of the open. Okay, so from that low to that high, you guys can see within that range we have this imbalance. Okay, well, within this imbalance, right, we're going to look to seek out more levels of resistance, right? With the next level of resistance is that Asian high and also the previous daily high. Okay, I'm not really, I know that we see this high as well, but I'm not looking to take out that high. Why? Because this high is enough resistance. We're bearish and we don't need more resistance. We just need to seek out some levels of resistance, take out those liquidity levels, and continue to move in the direction that we've anticipated, which is given from the weekly and daily bearish. Okay, we're coming into the previous area of accumulation. The key and most important thing here is the fact that we were so close at the open. Otherwise I would have been looking a lot lower, but the fact is the open came up, or came, and if I'm looking for an entry, I never just want to look at my previous area of accumulation and then just put my entry stop loss below the low and call it good. If it was that simple, everybody would be trading and everyone would know how to trade. Okay, but the reality of it is you have to anticipate these moves based on the liquidity that is taken. So for example, if I'm looking at potentially getting in at this level, right, potentially looking to get in at this level, there's an imbalance there. Okay, I'm not just going to look for price action come in, down, and up, right? What's likely going to happen is between this high and this low, some liquidity will have to be taken before moving to the upside. So now, if there's higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, we have all of this liquidity. That could be the liquidity that we go for. Okay, but sometimes you guys will see that the ranges can be so long, so high, and to get down to those areas, there's not much liquidity. Sometimes these expansions leave almost no liquidity behind. So what happens is on the retracement to get our entry, you will more than likely get some liquidity sweep before getting your entry. Okay, the liquidity sweep can be very minor. Okay, and to me the smallest types of liquidity sweeps are intraday. Intraday are of course within the day, right? Within the day, from the 4 hour lower for me. Okay, so as we retrace, we will create this level of liquidity to get taken. Okay, so your job as a trader is to wait for those opportunities, because most people think that your job is to get into the market. I promise you that's not your job. Your job is to wait more than execute. Okay, your job as a trader, as a professional, is to entice movements in the market and less predict, right? Because I could say that I want price action to move lower, but it doesn't have to. I mark out my previous areas of support that has swept liquidity, and if we come down to those areas, blessed. If we don't, blessed, no problem, right? So now you guys can see that we're getting that liquidity buildup right around the open. And so I will show you guys, actually. Honestly, I don't really have anything to hide ever, so I want to be very clear with you guys. Executions, I bet they'll show here. Give me 1 second. I'm gonna pause the video, log in, because otherwise my trades won't pop up. All right, so here are my executions for the day. Okay, as I'm looking for higher price action, and of course dabbling in this new market, which is the futures market. Okay, you guys can see I personally am sharing my experience with you guys, because I know that I make mistakes, and even though my plan says wait for liquidity, sometimes I even fall victim of jumping in the market way too early, as you guys can see here. Actually, I will show you guys this right now. So this first entry right here was based off, I believe, the 15-second. Okay, I jumped into the market here when we pushed down, right? And then immediately when we were coming back down, I realized that there was no liquidity behind this move, and so I closed there manually. Then we get a sweep of the low, and on this push down, I came back into the market. Now, when we came back into this imbalance, notice here, I add on another entry. Okay, so now I'm 2 contracts in. Price action accumulates one more time out of this imbalance here, as you guys can see. But what caused me to actually close both those contracts, as you guys can see here, was because we had what? Created upside liquidity in a previous area of distribution. Then what happens? We distribute. So that, to me, is a good sign to get out of the market, because that you're on the opposite side. Once we took out the low one more time, okay, once we took out that low one more time, let's go into the 1 minute time frame. Clean some of this makeup off, right? Okay, you guys can see here, you guys have a nice push down, right? We respect that low with the bodies, create an imbalance. Notice that there's no break of structure. It's still bearish, no break necessary. Okay, imbalance, entry. And honestly, because I'm pretty new to the futures market, even though my goal was to hit the previous daily high, I only went to that high. As you guys can see here, I collapsed the entirety of the order right there. I'm fairly new to the futures market. This isn't something that I like, I know it may look like I know what I'm doing, but I only know what I'm doing now because I didn't at some point, and I just put action towards it. And so, as you guys can see here, like, I got out of the market fairly soon. It was a 1 to 3, and price action hit my targets very, very well. I'm okay with it not being a part of the whole move. One of the reasons I wanted to hop on here, because the best feeling is when the trade goes in your direction and you are not even remotely worried about it, right? I'm working on becoming a consistent trader. I'm not working on becoming the best trader, right? The best soccer player, the best football player, the best at chess, the best at math, the best doctor, the best, welder, the best mechanic. All these dreams and goals to me are a very superficial, something that was stripped away from me. That desire wanting to be the best at something, that desire got stripped away from me from the market itself. The market literally stripped me away from any desire wanting to be the best trader or the best anything at anything. Why? Because honestly, if catching the entirety of this move would make me better, awesome. But if catching the entirety of a move every single day, every single time makes me the best trader, that's not who I want to be. I'm here to make my money and get out. As a new futures trader, I'm looking for consistency. Once I start seeing my targets, my entries and executions hit more flawlessly without so much prior hesitation, trust me, I'm going to be adding on to my trades and holding on for a lot longer. But as I build my confidence in this futures market, and as you guys will see, I am super happy with my 1, 2, 3. I caught a little over 1%. Not just that, but I realized, and I want you guys to write this down, you do not need the entire move to make money. I do not need the entire move to make money. And so with that, guys, I'm gonna let you go. I appreciate you guys. Started there a little bit. I appreciate you guys tuning in. Please share this video with anybody who may find it helpful, insightful, and if there's anything that you guys didn't understand throughout this video, entries or anything like that, please don't hesitate to go through the remainder of the course on this YouTube channel, and I'll catch you guys on the next one. Peace.